continuation of developing the property brochure for syndication and making sure that the investors are liking the returns that you'll be offering as the syndicator. It's very important for us to set some assumptions, annual operating assumptions they are called. In other words, how the rents will be growing, what will be the rent growth. Like in first year as you buy the property, if it will be 0% or 1 or half or kind of like that. Or year 2, what will be once you take over the property. Got to set assumptions in your projections as to the income growth or the rent growth for that property. And in the second year, what it will be in third year, what's the assumption in fourth year and fifth year or so. We like to get into the emerging market and sell the asset after 3 to 5 years. A lot of our syndicator lawyers have mentioned that maybe we should go from 5 to 7 years because the money is tied up. The investor's money is tied up in the asset and they cannot liquidate that quickly. And it's good to give a larger horizon like 5 to 7 years as compared to just 2 years, because whatever we put in the PPM, the private placement memorandum, and the operating agreement, which I'll be sharing in one of the other modules, we want to make sure that we give enough time for the property to get stabilized, to get the benefit of the increases in the value with increasing of the rents and decreasing expenses and so forth, or whatever the goal might have been, repositioning or whatever. So those things are very important, the annual assumptions on rent growth, on vacancy. What will be the vacancy when you just bought the property? How will it go down or up? Or will it be constant for the rest of the 5 to 7 years? We usually look at 5-year projections actually in the brochure that we send it to the investors. Concessions, what kind of concessions the property is giving. Is it 1% of the total rent collected? Revenues? Loss of lease. Loss of lease is a very important term. What that means is, like for example, there is a market rental rate, but then some of the tenants in the commercial property are not paying the market rate because they've been there for a few years and they are good tenants, so their rates are lower. They are paying less rents. It's the monthly rent rate by the tenant. So that is very important for us to also see what's the loss of lease and would it stay at 1.5% or 2%. Non-revenue units, that's something different. Non-revenue could be model units, could be we are giving a special unit to the maintenance person to live, or could be one of the units is made into an office if it is not an office. So those are non-revenue units. Utility reimbursement, that's another very good assumption to find out. Is the tenant paying all the utilities? Is it individually metered in multifamily? So utility reimbursement per month per door or per apartment, is it like $10 or $20 or $50? Are you including the water total fee, a portion of that, and the garbage? You can also charge garbage fee to the tenant, and also the sewer. If it's individually metered for electricity, of course the tenants are paying for that, but then you can also get the utility reimbursement. We call it bill back or the RUB system. Those are some words also used, and that's where you can take that assumption. Is it $20 or $50 or things like that? So the main thing we want to really see is that these assumptions are well taken care of before we go into our 5-year pro forma and budget part of the brochure that we'll be giving to the investors.